This video is for anyone preparing to sit for the Oklahoma State portion of the life insurance producer exam. It covers only what Oklahoma does differently. The national rules you are studying elsewhere, how policies work, the basics of underwriting, federal tax treatment. None of that is repeated here, because Oklahoma does not test you twice on the same thing. What the state asks about is its own law, its grace period, its free look, its guarantee limits, its licensing and continuing education rules. So everything you hear in the next 40-some minutes is a number or a rule you can expect to see on the Oklahoma half of your exam. Study this alongside your national material, and you will walk in ready for both halves. Start with who is in charge, because the exam likes to test it. Insurance in Oklahoma is regulated by the Oklahoma Insurance Department, and at the head of that department sits the Insurance Commissioner. In Oklahoma, the commissioner is elected by the voters of the state, not appointed. That matters, and it is worth fixing in your memory, because in many states this office is filled by appointment, and the exam may offer appointed as a tempting wrong answer. In Oklahoma, the commissioner is elected. The department does the day-to-day work you will be asked about. It issues and renews producer licenses. It sets and enforces the rules. It investigates complaints, and it can fine, suspend, or revoke a license when a producer breaks the law. Throughout this video, when we say the department or the commissioner, that is the authority we mean. Your job for the exam is to know what Oklahoma requires, what the deadlines are, and where Oklahoma parts ways from the national norm. Let's get into it. Studying for your insurance licensing exam? Check out the My Insurance Guide flashcards app, built specifically to help you pass your insurance licensing exam with confidence. Master over 1,000 expertly curated flashcards across every insurance line. Built-in spaced repetition brings back the tough terms right when you need them, and timed practice exams prepare you for the real thing. Click the link below and download today. Now, back to the video. To hold a resident life producer license in Oklahoma, you must be at least 18 years old. You must pass the licensing exam, and you must apply to the department for the license. Passing the exam is not the same as being licensed. The exam is a prerequisite, and the application is a separate step. Here is a sequencing detail Oklahoma builds in that candidates trip over. After you pass, you wait 3 business days before applying, because the result has to reach the licensing system first. 3 business days. Then you submit your application online through the national producer system the state uses, and you allow several business days for the department to review it. There is one path into producing without taking the exam at all, and the exam likes it because it is narrow. Oklahoma allows a temporary license issued without examination for a period not to exceed 180 days. Say that number again, 180 days, the outer limit on a temporary license. It is not a shortcut for ordinary applicants. It exists so that an insurance business can keep being serviced when a producer dies or becomes disabled, and it typically goes to someone like the surviving spouse or the legal representative of that producer. So, if you see a question asking how long a temporary Oklahoma producer license can last, the answer is up to 180 days, and if you see a question about who it is for, think continuity of an existing business, not a new agent skipping the test. On your exam, watch for the difference between passing and being licensed, and watch that 180-day temporary figure. Those are 2 favorite targets in the licensing questions. Once you are licensed, Oklahoma puts you on a 2-year cycle. Your license runs for 2 years and expires on the last day of your birth month. That birth month detail is distinctive, so hold on to it. Not a flat calendar date, but the last day of the month you were born. The renewal window opens 90 days before that expiration date, which gives you time to finish your continuing education and file. We'll come back to the education itself in a moment, because you cannot renew without it. The fees are set by statute, and a few are worth memorizing because the exam treats them as facts. The resident producer's biennial license fee is $60. A temporary license costs $20. The annual appointment fee an insurer pays for each producer it appoints is $30. The renewal fee is the same as the original license fee, so renewal is also $60. Two consequences flow from the rules, and they make clean exam questions. If you renew late or incomplete, the fee doubles, and a duplicate license costs half the original. Late doubles, duplicate halves. That pairing is easy to remember and easy to test. Let the license lapse, and Oklahoma still gives you a road back, but it costs you. You have 1 year to reactivate, you must be current on your continuing education, and you pay a double fee to do it. Miss that 1 year window and reactivation is off the table. You would start over. So the numbers to lock from this section are the 2-year term ending, the last day of your birth month, the 90-day renewal window, the $60 license fee, and the 1 year reactivation limit at double the cost. No continuing education, no renewal. Oklahoma makes that a hard prerequisite. So this is a section the exam mines for numbers. A resident producer must complete 24 hours of continuing education every 2-year term. 24 hours. Inside that 24, the makeup is fixed. 3 hours must be ethics, 2 hours must be an Oklahoma legislative update course, and the remaining 19 hours are general producer credit. 3, 2, 19, and they add to 24. The exam loves to hand you a wrong total or swap the ethics and legislative numbers, so anchor them. 3 ethics, 2 legislative, 19 general. 2 more numbers help you on test day. If you earn more hours than you need, Oklahoma lets you carry up to 6 excess hours forward into your next term, and they carry as general credit. And the legislative update requirement is specifically an Oklahoma course, because its whole point is to keep you current on this state's law. Then there are the product-specific training rules, which sit on top of the 24 hours, rather than inside them. If you want to sell long-term care insurance, you must complete an 8-hour long-term care training course before you offer it, and then a 4-hour course each renewal cycle after that. 8 to start, 4 to keep going. If you want to sell annuities, Oklahoma requires you to complete an annuity best interest training course before you sell any annuity product. The reason behind these is consumer protection. Long-term care and annuities are complex products often sold to older buyers, so the state insists you are trained before you recommend them. On your exam, remember that these trainings are gateways. You complete them before the sale, not after. Now to the contract itself, and to 2 numbers Oklahoma test writers reach for again and again. The first is the grace period. After a premium goes unpaid, Oklahoma gives an individual life policy owner a grace period of 30 days, during which the policy stays in full force. 30 days. If the insured dies during that grace period and a premium is still owed, the insurer doesn't deny the claim. It simply subtracts the overdue premium from the death benefit. That is the purpose of a grace period. A missed payment doesn't instantly destroy coverage. Here is the trap, and it is a good one. Group life in Oklahoma carries a grace period of 31 days, not 30. So the same statute book gives you 30 for individual policies and 31 for group. If a question is about an individual life policy, the answer is 30 days. If it specifies a group policy, it's 31. The exam will absolutely put both numbers in front of you and see whether you know which is which. The second number is the free look. Oklahoma requires that every individual life policy and annuity carry a notice giving the owner 10 days from delivery to examine it and, if they choose, return it for a full refund. 10 days to look it over with no obligation. If the owner cancels within that window, the policy is void from the start and the company refunds every dollar paid, and it must do so within 30 days of the cancellation. So 2 numbers live together here, a 10-day free look and a 30-day refund deadline. One narrow exclusion is worth knowing. This free look does not attach to credit life issued with a loan or to a policy reached through a conversion privilege. Let's recap the must-know figures so far. Individual grace, 30 days, group grace, 31 days, free look, 10 days, Refund within 30 days. Suppose a policy does lapse. The grace period ran out and the premium was never paid. Oklahoma still lets the owner bring it back to life through reinstatement, and the number to know is 3 years. The owner may reinstate within 3 years from the date of default, as long as the policy wasn't surrendered for cash. Reinstatement isn't automatic, though, and the exam wants you to know the conditions. The owner has to show evidence of insurability satisfactory to the insurer, meaning prove they're still insurable, and pay all the back premiums with interest, which Oklahoma caps at 6% compounded annually. So reinstatement equals 3 years, proof of insurability, plus back premiums at up to 6%. That dovetails with incontestability, which is the period after which the insurer can no longer challenge the policy over something in the application. In Oklahoma, the contestable period runs 1 to 2 years, depending on the contract, and once it passes, the insurer cannot resist a claim because of a false or incomplete statement on the application. During those first 2 years, though, if the insurer finds a material misstatement, it can deny the claim as if the policy never existed. Here's the wrinkle the exam rewards. When a lapsed policy is reinstated, a fresh contestable period begins for the reinstated coverage. Reinstatement restarts the clock. A lot of candidates assume the original incontestable date controls forever. It doesn't once there's been a reinstatement. The suicide clause runs on its own 2-year track. If the insured dies by suicide within the first 2 years of coverage, the beneficiary doesn't receive the full death benefit. The insurer instead returns the premiums that were paid. After 2 years, the suicide exclusion falls away, and the death benefit is payable like any other claim. 2 years for suicide, the same 2-year outer edge as contestability, which is exactly why the exam pairs them, and why you should be able to say what each one does. Recap the numbers here before we move on. Reinstatement within 3 years at up to 6% interest, a contestable period of 1 to 2 years that restarts after reinstatement, and a 2-year suicide exclusion that refunds premiums. Replacement is one of the most heavily regulated things you will ever do as a producer, so slow down here. Replacement means taking action that causes an existing life policy to be lapsed, surrendered, forfeited, or converted, so that a new policy can take its place. Oklahoma cares about replacement because the policy owner can be quietly harmed by it. They may restart a contestable period, restart a suicide period, lose built-up cash value, or pay higher premiums at an older age. So the state builds in protection. When a sale involves replacement, Oklahoma requires the producer to identify it as a replacement and to deliver the consumer-specific written information before the new policy is issued. Part of that is a set of plain language definitions the applicant must receive, explaining terms like lapse, surrender, and placing a policy on extended term, along with what the incontestable clause and the suicide clause mean. And Oklahoma requires those last 2 definitions to be printed in larger type so they cannot be glossed over. The purpose is simple. The buyer should understand exactly what they are giving up before they give it up. Then there is the conduct line you must never cross, because the exam builds questions around it. A producer may not induce a policy owner to drop existing coverage through misleading or incomplete comparisons. Doing that has a name, twisting, and we'll define it fully in the conduct section. For now, connect 2 things you already know. Replacement triggers disclosure duties, and the 10-day free look gives the buyer a window to undo a replacement they were rushed into. On your exam, if a scenario describes an agent replacing a policy without the required notice, or talking a client out of an old policy using half-truths, that agent has violated Oklahoma law. The replacement rule exists to slow the transaction down so the consumer can see clearly. Annuities get their own protections in Oklahoma, and the standard the state applies is one you must name correctly. Oklahoma holds producers to a best interest standard when recommending an annuity. That is a stronger duty than plain suitability. Under the best interest standard, You must act in the best interest of the consumer under the circumstances known at the time you make the recommendation, putting the client's interests ahead of your own compensation. Suitability asks whether a product merely fits. Best interest asks whether it truly serves the customer. If a question offers both, Oklahoma's answer is best interest. That duty comes with concrete obligations. You have to gather the consumer's financial situation and needs. You have to have a reasonable basis to believe the annuity effectively addresses those needs. You must disclose your role and how you are paid, and you must avoid or manage conflicts of interest. The documentation has to back up the recommendation. There is also a training gate, and it is a favorite exam target. Before you sell, solicit, or negotiate any annuity in Oklahoma, you must complete an approved annuity training course of 4 hours. 4 hours, completed before the first annuity sale. A producer who holds a life license but has not finished that training simply cannot sell annuities until they do. And remember, the free look you learned earlier applies here too. An annuity carries the same 10-day right to examine and return for a full refund. So for annuities, lock in 2 ideas. The best interest standard governs your recommendation, and a 4-hour training course is the gate you pass before you ever quote one. This section is about getting money out of a life policy before the insured's death, and Oklahoma regulates each path. Start with accelerated benefits. An accelerated death benefit lets a living insured collect part of the policy's death benefit early, typically when they are terminally ill or need long-term care, with the amount paid out reducing what the beneficiary later receives. Oklahoma's law expressly permits life and annuity contracts to provide this acceleration as an advance on benefits that would otherwise be paid at death. The key idea for the exam is that the benefit is accelerated, not added. The insured is borrowing against their own death benefit, and the payout shrinks the eventual claim. A viatical or life settlement is different, and the distinction is testable. Here, the policy owner sells the policy outright to a third party for a lump sum that is less than the death benefit, but more than the cash surrender value. The buyer becomes the new owner, keeps paying premiums, and collects the death benefit when the insured dies. Oklahoma regulates these transactions and the people who broker them, and the state treats fraud in a viatical or life settlement as a serious violation. Misrepresenting the insured's health or life expectancy to manipulate the deal is prohibited and punishable. So keep the 3 escape routes straight, because the exam blurs them on purpose. Accelerating benefits keeps the policy with the insured and pays in advance. A loan borrows against cash value and keeps the policy in force. A viatical or life settlement transfers ownership to someone else for cash. Same goal of accessing value early, 3 very different mechanisms. Here is a section dense with numbers, so let's anchor them carefully. Every insurer licensed to sell life, health, or annuity products in Oklahoma must belong to the Oklahoma Life and Health Insurance Guaranty Association. The association is the safety net. If a member insurer becomes insolvent and cannot pay, the association steps in, funded by assessments on the other member companies, to continue coverage and pay claims within set limits. Those limits are exactly what the exam asks for. For life insurance, the association covers up to $300,000 in death benefits and up to $100,000 in net cash surrender value. Say those again: $300,000 in death benefits, $100,000 in cash surrender. For annuities, the association covers up to $300,000 in the present value of annuity benefits. And there is an overall ceiling. No matter how many policies a single individual holds with the insolvent company, the association will not pay more than $300,000 in the aggregate for that person, with one carve-out where basic health benefit plans reach $500,000. For a life producer, the figures to burn in are $300,000 for the death benefit, $100,000 for cash value, and a $300,000 aggregate cap. Now, the rule that trips up more candidates than any number in this section. You may not use the existence of the Guaranty Association to sell or advertise insurance. It is illegal in Oklahoma to tell a prospect that their policy is safe because the Guaranty Association stands behind it. The reason is sound. The association exists to protect consumers after an insolvency, not to be a marketing crutch that encourages people to ignore an insurer's financial strength. On your exam, if an agent reassures a client by pointing to Guaranty Association coverage as a selling point, that agent has broken the law. Know the limits, and know that you can never sell with them. The conduct rules are where the state protects the public from you at your worst, and the exam tests them by making you tell near-identical violations apart. Let's define the big ones cleanly. Twisting is inducing a policy owner to drop or change existing coverage in favor of a new policy by using misrepresentation or an incomplete or misleading comparison. The harm is that the client is talked out of good coverage based on a distortion. Churning is a close cousin with one difference worth memorizing. In churning, the replacement is funded from the same insurer's existing policy values, the agent recycling a customer's own coverage to generate a new sale and a new commission. Twisting can involve any companies. Churning stays inside one insurer's book. Don't confuse the two. That is a classic Oklahoma trap. Rebating is offering the client something of value that is not stated in the policy as an inducement to buy. A kickback of part of the commission, a gift, a special favor. Oklahoma prohibits it, and the reason is fairness. Two buyers of the same policy should pay the same price on the same terms. Then there are the broader prohibitions you would expect: misrepresenting policy terms, making false statements on an application or to the department, defaming a competitor, and committing fraud. Violate these, and the commissioner has real teeth. The department can place a producer on probation, censure them, levy fines, and suspend or revoke the license outright. Let's recap the distinctions you must hold. Twisting is misrepresentation to replace, churning is replacement within the same insurer, and rebating is an off-contract inducement to buy. Mix those up, and you will miss points the exam is practically handing you. We close where your journey actually begins. Test day itself, run by PSI, the vendor Oklahoma contracts with. Your exam is delivered on a computer at a PSI test center or through remote online proctoring, and it is closed book, so everything you have studied has to come from memory. The exam is built in two parts: a general portion covering the national material you are studying elsewhere, and an Oklahoma State portion covering everything in this video. The two parts are scored separately, and you must reach 70% on each to pass. 70%, and clearing one part does not rescue a failing score on the other. A few logistics carry real study value. The examination fee for the life exam is $38. If you do not pass, Oklahoma does not make you wait long. Testing is open eligibility with unlimited attempts, and you can schedule a retake as soon as the next day, space permitting, though not the same day. Plan to arrive 15 minutes before your appointment for check-in and bring one current, government-issued photo identification, because without it, you are turned away and you forfeit the fee. When you finish, your score appears on screen and arrives by email, and PSI reports your result to the department within 48 hours. From there, wait 3 business days, then file your license application through the National Producer Registry the state uses and pay the $60 biennial license fee. Pass the exam, wait the 3 days, apply, pay $60. That is the path from candidate to licensed producer. Let's lock in the numbers that win or lose the Oklahoma portion. Your individual life grace period is 30 days, and group is 31. Your free look is 10 days, with refunds due within 30. Reinstatement runs 3 years at up to 6% interest. The suicide period and the outer edge of contestability are both 2 years, and reinstatement restarts the contestable clock. Continuing education is 24 hours every 2 years, 3 ethics, 2 legislative, 19 general. Your license lasts 2 years and ends the last day of your birth month. The Guaranty Association covers $300,000 in death benefits and $100,000 in cash value, with a $300,000 aggregate cap, and you may never sell with it. A temporary license tops out at 180 days, and you pass each exam portion at 70%. You came in worried about a portion of the exam built on Oklahoma's own quirks, and now you know them cold, the numbers, the traps, and the reasons behind the rules. Study the national material alongside this, run the numbers until they are automatic, and walk into that test center ready. You've got this. If this video helped you feel readier than you did an hour ago, give it a like and subscribe so the next part of your studying is right here when you need it.